Welcome back. You're still watching Countdown with us. And as we speak, markets are at day's high once again. Nifty 10,778. I guess the previous high was somewhere about 10,782. Let's see if we can hit another psychological mark of 10,800 in today's session. And remember, we were mentioning the resistance for Bank Nifty was somewhere about 26,200 because that's where the maximum open interest concentration was. And that too has been breached in today's session. Bank Nifty currently just about at day's high, 26,282 is the mark right now. And which are the Fab 4 stocks in a market like this, which are scaling newer highs almost every day? Let's go across to Yash Upadhyay to find out the same. Yash, over to you.
Thanks for that, Navneet. So Sterlite Tech came out with their numbers earlier in the day. They were a good set of numbers. EBITDA came in 43% higher at 202 crore rupees. Margins seeing a healthy 300 basis points expansion. Net profit too saw an 83% growth on a year-on-year basis. So overall, good set of numbers, and the stock is up about 5.5% today. JB Chemicals has snapped its 3-day losing streak today and is up about 3.5% at this point in time after the company said that it has received the European Good Manufacturing Practices approval from the Medicine Authority of Malta for its Panoli unit located in Gujarat. Laurus Labs had surged as much as 5% today after Motilal Oswal came out with a note initiating coverage on it. Now they have assigned a buy rating and have set a target price of 651 rupees, indicating a potential upside of 22% from its previous day's close. Now they expect the company's formulation business to post a strong growth over the next 2 to 3 years and expect their revenues and net profit to grow at a compounded annual growth rate of 17% and 28% over FY20. And finally, we have Sterling Tools. The stock is up about 10.5%, snapping its 6-day losing streak, with volumes too coming in significantly higher at over 8 times the 20-day average. Back to you.
That's an interesting set of stocks. Yash, many thanks for joining in. But it's the markets that demand attention. And Kunal Saraogi is with us. Kunal, if you had to, let's just look at the indices. Sensex clocked in 35,000, Nifty new highs, Nifty Bank about 1.25% higher, which is looking like the strongest index to trade from these levels.
Well, I think, Neeraj, the real breakout has happened in Bank Nifty. There's no two ways about it. I think there's a very clear breakout above 26,000, and Bank Nifty has actually sustained above it. I think that's the real heartening thing here. That's the real positive side. And I think Bank Nifty can very well get to 26,500, 26,600 before the current move peters out. So I think one should definitely try and trade longs on Bank Nifty for the first target of 26,500, although I expect it to go beyond. So 26,800 can also be a target. 26,500 is your first target. Stop loss, I think, should be in the region of 26,100.
26,100 is now the stop loss level here, and you can still continue to go long on Nifty Bank. So that is looking more exciting. One banking stock that has been recommended so far is BOI, but if you look at SBI, PNB, Canada, all these banks and also corporate focused private banks are looking good. Kunal, would you have any other pick from banking space, mostly PSU if possible?
See, out of the PSU basket, I think the best placed is Bank of Baroda. If you look at the chart and if you look at the overall structure, I expect some upside to happen on Bank of Baroda. But what is most interesting is private sector banks. And we've seen breakouts across the board in almost all of them, particularly ICICI Bank. I see more upside for ICICI Bank given the very significant breakout it's had, not only on its short-term charts, but also on its longer-term charts. So if one were to bet on a banking stock, I think it should be ICICI Bank, given the structure that it has.
The ICICI Bank has been going up in the last, I think today is the 4th straight day of gains for this counter, up nearly 3%. The other stock which has gone up is Adani Enterprises. That's trading with gains of almost 4% right now. If you could just pull up that counter. Okay, up almost 5%, above the mark of 200 at day's high. Hadrien on the charts at 204 for Adani Enterprises. Would you initiate a fresh long?
Yes, definitely. Despite the 5% move that we have seen today, I think the rising volumes, the sheer strength that the relative strength is indicating, the trend that the stock is actually trying to pick, that is the previous trend, is already up. So I think Adani Enterprises definitely can be a buy even at these levels. The stock is almost breaking out confidently once again with good volumes, and I think it is heading towards the 210, 212 levels. So your stop loss should be close to 201 on an Adani Enterprises.
Usually take the BTST or STBT at 320, but Hadrien,
Maybe, yeah.
before you go, if you have any other trading idea in last minutes of trade today?
Yeah, definitely. Indian Bank, we've been talking about this stock even yesterday, and I think Indian Bank has finally shown some signs of a very good strong breakout on the daily chart. So Indian Bank would be something that I would bet on for a BTST. You can play for a target of 395 when your stop loss should be close to 380.
Seems to be banks across the board, quite frankly, in terms of trading recommendations. Hadrien, thank you so much for joining in today and giving us your thoughts. Just want to mark Jubilant Life on in the last few minutes post its numbers. There's been a sharp uptick there, 13.5% higher, 921. I know it's time for the FNO check, but since we have Amit Jeswani with us, maybe just take an initial thought from him. I don't know if he tracks Jubilant Life or no, but fairly decent set of numbers. Amit, good having you. Thank you so much for taking the time out and speaking to us. This is Neeraj here. Good afternoon. Any thoughts on Jubilant Life? Have you looked at the counter at all?
Hi Neeraj, thank you for calling me on this show. I've not looked at Jubilant Life. No, I don't track that counter.
I call. Amit, we'll just continue this conversation with you in moments from now on a clutch of other things which I'm sure you would have. But it's that time of the show when we get in some thoughts on what stocks that could enter the FNO ban or come out of the FNO ban as well. And Amit, what's your list looking like today?
Well, Neeraj, it's time for stocks to come out of the FNO ban, since there are 15 stocks which are in the ban period, but also there are 2 stocks which may just feature in tomorrow's ban list. So let me start off with that. One of them is DLF. That's added a lot of open interest, and surprisingly, the open interest addition on the future side has been for the February futures. Open interest is up over 50% for that. And as you can see yesterday, the overall OI as a percentage of market-wide position limit was 90 for DLF. For a stock to get into the FNO ban, it has to breach the 95% mark. As per the current calculation, it does look like that it may enter. The other one is HTIL. The stock is pretty active in today's trade. It actually came out of the FNO ban after breaching that 80% mark, but after coming out of the ban, it's seen a lot of interest where addition has been seen both for the option strikes as well as futures. So watch out for these 2 counters, and almost 4 to 5 stocks that you should keep an eye on which can come out of the FNO ban. So I'm starting off with Reliance Power. The other one is Jet Airways. Reliance Communication is the other one, and JP Associate. All 4 of them, if you look at the current trends, at least it looks like it may come out of the ban, because there is a lot of unwinding of position both on the future side as well as unwinding of open interest has been seen for a couple of option strike. Remember, for a stock to come out of the FNO ban, it has to breach the 80% mark. And just a disclaimer here, the trends do change in the last 15 to 20 minutes of trade as well.
Okay, let's wait and watch for each of these names, but it's just the market which is just a buzz and moving up in a very, very strong fashion. Before we get into what dealing rooms are recommending in the session today, Amit, you may not have looked at Jubilant Life, but the buoyancy in the markets, the last time that we spoke, unless I'm very wrong, you had mentioned that you are taking some chips off the table, you're not fully invested, but this market has now shown a habit of bouncing back at almost every time, irrespective of the quantum of the cut. Every time there is a bit of a wobble, there is money coming in and chasing stocks, and this time around is no different. What are you doing right now?
In fact, we've come on 15% cash. So we've increased the cash from 10% when the last time I came to your show to about 15% now. See, it's a very difficult scenario that we are in. Example, the momentum, like the last time I came on your show, I mentioned that we've started gone long steel on our momentum product. We are up broadly 54% in a month in that side. So that's how fast the returns are there. And on the core portfolio, those are high quality stocks, and those stocks continue to give basically market returns. But the major trends that we are looking at right now is in the real estate space. That's where there is strong flow happening from like the the non-organized side to the organized side. So we met more than 7 real estate builders in the last 1 month, and these guys are as happy as they were in 2011, right? And if you see at booking, the way bookings are happening, the unorganized guys are 100% going to be out of the market in the next 2-3 years. And we've been just looking at real estate companies, and we already own one proxy to real estate players, that is Capacite Infra. That's where we are long, and it's one of our largest holdings. So we're looking at that space very carefully now.
Okay, hold on to that thought. We'll probably probe that in more detail in a bit, Amit. But again, it's 3:15, so the time of the show when we tell you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, gentlemen, both of you. Thanks for joining in. Darshan, let's start with you first.
Yeah, good afternoon, Neeraj. Axis Bank is one of the stocks that's been widely spoken about. It's gained almost 4%, pretty much trading at the day's high. Some of the domestic funds are actively accumulating. The general buzzword is that results are also expected to be on the stronger side as per analyst estimates. So Axis Bank is one of the stocks that's been spoken about. The next stock that's been spoken about is Just Dial. It's trading rather flat in trade, but there's a buzz of a potential corporate announcement that could come in. That is something that we are watching out for. And the last one is MRPL, which is also doing fairly, it's down almost 1%. So MRPL is one of the counters in which some of the HNIs are actively accumulating the counter. So that's something that dealers are watching out for. But Yatin, what are you hearing?
Darshan, PNB, that is one stock we need to watch out for, and in general there is a lot of short covering that we are seeing as far as PSU banking stocks are concerned, and on an overall basis also there is some fund buying as far as PSU banks are concerned. So buy today, sell tomorrow kind of strategy here is what dealers are talking to their clients. Apart from that, watch out for Marico, that is one stock. And in general, FMCG has been quite sideways. So domestic fund flows on the negative side continue here. And finally, in the cash market segment, and you were discussing about this, Jubilant Life Sciences, very strong results, and after the strong results have come in for the third quarter, we have seen a lot of accumulation coming in from the HNIs. In fact, they posted a profit of over 200 crores for the quarter. And, people are talking about this company, if they sustain the growth, could be, one of the stocks for 2018. So, Jubilant Life Sciences, wherein dealers are expecting some short-term trading momentum to continue.
It certainly seems like buying has been seen up 13%. We were just talking about it. Yatin, thanks a lot for putting that into perspective. Okay, Amit, you were mentioning about your conversations with some real estate developers, and you have an indirect exposure to that through Capacite Infra. No direct exposure?
Actually, we're in talks with a company to buy a small stake, but we've not gone long yet. See, Capacite is basically an indirect play on all builders, right? And that business is more scalable than a real estate builder. So we've been working on all real estate companies around the globe, that what has actually worked well for the most successful companies. For the most successful companies, what has worked is they're leaders in a micro market. Like Oberoi is a leader in the Bombay market. So wherever Hiranandani, and even in the Bombay market, there are micros, right? So Oberoi is a leader in Goregaon market. Hiranandani is a leader in the Powai market of Bombay. So you basically there will be clusters, and every cluster will have one builder. So now the working of these real estate companies is changing a lot. Godrej Properties is a great business model. So we are working on all companies. Like I'll just give you an example, like Aryan Superstructure. This company is a very small company. The market cap is 700 crores. This company has given an order to Capacite, a company which I own, worth 800 crores right now. The order is more than the market cap of the company right now. So those are the kind of bets you look at. Now Aryan has a very good execution capability. They get in the best brand ambassadors. So for the last project, the brand ambassador was Ranveer Singh. For this project, it's Jacqueline Fernandez, and they've already sold out of the 2,000 flats, they've already sold 400 flats in the first 1 week, right? So the bookings are very strong in these small like organized micro market players of real estate companies. So we're looking at that space very carefully.
Amit, what about outside real estate? Is there any other pocket which excites you? And one more question I want to add to that. You said your cash levels have increased to 15%. Could you also share with us where have you unwound your positions?
right? So I'll first on what other trends we're looking at. The thing is, trends are global, right? Between 2003 to 2007, the real estate stocks in India went up from 150 to 400 times. The trend was same in the US market, the trend was same in the Chinese market. So trends are global in nature. Between 2009 to 2015, the pharma index in India went up 7x. But that's the same case which happened in US as well, where the pharma index went up 4.5 times. So trends are again pretty global. If you see the last 2 years, which trend has worked the best, that is the IT trend. FANG stocks, as you know, have rallied multiple times. Like broadly, if you bought the IT index, you're up somewhere around 150% in the US market, Chinese market. Like last year, even if in China, you had your Tencent and Alibaba going up 200% in the last 2 years. These are large market cap companies. So we are looking at, we've not been able to find it right now, but we are studying each and every business model of IT companies in India. We need a product company, not a services company. We need a company that will grow at 30% because we do not buy companies that grow at 20% or lesser. So that we need where operating margins can increase, just like product companies. So we're looking at that as a trend. We're studying a lot on every IT company possible because that's where real wealth will be created. On the second question of where we have liquidated, these were basically junk stocks that we were holding in our portfolio. So basically those gave us good money. We are holding on to the high quality core bets, but the junk trades which we keep doing, and we realize that the stocks are not as good as we initially thought. We've been cutting down on those sides where even if there is 90% conviction, we are getting out. So till the time we're not 100% convinced of the story, at this time we're not going out and buying it. In fact, we're selling it.
Okay, so that's his strategy. Some of the low quality stocks, maybe that is where Amit has pruned his portfolio at this point of time. Kunal, as we approach the last few minutes of trade, any BTST or STBT idea you would like to share?
Well, a couple of stocks, Pradeep, that I think one can take a bet on. First is Welspun Corp, which has broken out on the charts. I expect for it to get to 200 levels. One should put a stop loss at 165 and go long. This is not essentially a BTST, but this is more like a positional trade, which can work out over the next 1 week or two. The other one I like, which can be a tremendous BTST, is Radico Khaitan. We've seen a breakout today. I expect this breakout to carry 350 can be your first BTST target. It could well go beyond 320 is where one should put a stop loss and go long.
Very interesting. Any thoughts on the liquor space, Amit? The stocks have had a rally already. Are they still worth a play?
See, the prices of molasses are down 80 to 90%, right? So that's where the trade is. So raw material molasses as a percentage of cost is about 10 to 12%. So that's going to come down. But this is not going to have a lot of longevity because it's going to be like a 1 year phenomena where these companies will have great set of numbers. But I think that's all you need in a bull market, right? 1-2 great quarters and you see stocks these days going up 50-100%. So it's a bull market scenario and a great bull market play, but I wouldn't hold them for a very long time.
Amit, what about the PSU banking space? Would you take a bet there?
No, but we like ICICI Bank. So we are now very positive. If you look at the NPA situation, right? Now, ICICI's NPA, let's say 9-10%. It cannot get worse. So you have telecom, which is getting, the problems there are getting sorted. RCom started getting solved. You see infrastructure, majority of problems are getting sorted there. The steel, I think there are no new NPAs which can be generated. There might be some haircut due to Bhushan and all those guys, but at least there's a buyer. So your net NPAs will start coming down after. So this quarter will probably be the last highest NPA, or it will start falling from this quarter. So ICICI is actually at the biggest inflection point, and with lower NPAs, growth starts coming in. So we are very positive on the corporate banks. ICICI, Axis, these guys can outperform the private sector high quality like Hindustan and HDFC for the next 1 year. So that's where we are. We don't have any position there, but we are liking that story where NPAs start coming down, growth starts picking up. You cannot go wrong there.
Amit, the other set of stocks are the ones which are looking expensive from a near-term valuation perspective but are showing earnings growth. I believe Sterlite Technologies would fall in that bucket, and this quarter was pretty exceptional, to be honest. Have you looked at the business? Do you like the stock, and do you like it at the current valuations, even if you do?
See, the thing is that there are very few companies that are growing at more than 30%. Last we checked, there are 132 companies which are growing at more than 30% out of the 6,000 companies. Mind you, there will be some cyclical companies as well. So this is a secular growth company. Valuations never come down till the time the growth stops. So unless the market falls 40-50%, these valuations are here to stay. At the last, I have not done my own research, but the research reports that we keep reading, we saw that by 2020 they'll post 3 times the profit what they posted in 2017. So markets are discounting that, and for every time they show numbers in that direction, markets keep discounting that more. But there are very few growth stocks. This is a long, big opportunity. It's a great story. All these work super well in the bull market.
Yeah, so Amit, I just want to know. So out of those 132 names that you said are growing at over 30%, is there a name, or are there names which are available at edible valuations?
Not even one, I can guarantee you that, because if you want a 30% stock, 30% ROE, 10-15 P multiple, it just cannot happen. So there are 3 risks that we divide these stocks into 3 risks that you can take. You can either take a management risk where the management is tainted, you can take growth risk, or you can take valuation risk. You cannot get all 3 at this stage of the bull market. You cannot get all 3 at one point of time. So let's say Diwan housing, right? So that is part of our portfolio. They don't have the best corporate governance standard, but the company will grow at 30% plus for the next 4-5 quarters. So and it trades at 14-15 times. So you have valuation on your side, you have growth and your stories on your side, but you have some management risk. So you have to take some risk there, and that's where you will make. So DHFL, I'll tell you, for the last 6 months they have grown their retail disbursements at 46%, and markets are pricing 20% AUM growth, but it will beat when the numbers come out. It will beat all analyst expectation, and we believe there'll be a re-rating in this stock. The risk there is that bond yields have moved higher for the housing finance companies, so that might have a small impact, but you will have to take one of these 3 risks. Either you take growth risk, management risk, or valuation risk. Without you will not find everything together now. Not possible.
I mean, today it looks like market is discounting all kinds of risk and just moving up. 35,100 on Sensex now. Let's see how the closing really looks like. We'll start wrapping up the market with Neeraj.
The Nifty is on the verge of clocking in 10,800 as well. So 200 points, and we nudged the 11,000 number. But yeah, this is the big one, 35,000 for the Sensex. This is a really big number, and led predominantly by the banking names, not just the private banking space. I think the PSU banking space did well too. And the broader end of the spectrum, which was underperforming till about 2, I would presume that there has been some bit of an uptick there too. Let's bring up the mid caps and the small cap. The small cap index was flat. It's up 0.5%. The mid cap index, about 1% higher. So good going really out there. And very quickly, I'll just run through the names. There is hardly any kind of red. The top loser is Wipro, which is down about 1.5%. But just look at the list of gainers filled with banks. Axis, SBI, yes, ICICI Bank. Some bit of IT flavor with Infosys pitching in out there, and heavyweights like L&T and ITC participating too. But essentially a clutch of green, very little red. Wipro and HDFC Bank, arguably only the 2 names which are looking slightly somber. And the broader markets, which are not looking all that great, Navneet, have just started to participate in the last 1 hour.
That's right, Neeraj. A good recovery was seen for the broader market. So let me start off with a couple of the media counters which were pretty active. Shimaru was the one which was locked in upper circuit with gains of as much as 20% in today's trading session. It did close around the levels of 550. As you can see, the circuit limit came in just in the last half an hour of trade. TV today is the other counter from the media space, which was very active in today's session. So that too had a good trading session. Jubilant Life reporting very strong set of numbers, and the intraday chart of that will tell you that the stock went up just as and when the numbers came about. So good closing for Jubilant Life as well. Astron Paper, a recent listing on the stock exchanges, spurt in the second half of the session. As you can see, Astron closed with gains of as much as 15%. JP Associates was pretty active in today's trading session. Well, maybe the stock comes out of the F&O band tomorrow, but the stock closed almost at day's high with gains of 6%. Well, it is all about the banking counters today. So look at stocks like Syndicate Bank, Punjab National Bank, or be it Karnataka Bank. All of them registered strong gains. Well, I've just highlighted 3 stocks here, but the entire pocket was pretty active today. Besides this, Adani Enterprises did have a great session of trade. The stock closed with gains of 5.5% around day's high and also above the mark of 200 at 205. Radico, Khaitan, couple of these liquor stocks have been active. So Radico as well as United Breweries, both of them spurred. Radico closed with gains of 8% and United Breweries almost up almost 4%. Result reaction with regard to Jai Bharat Maruti, the stock came under pressure because the Q3 numbers of the company were not so good and the stock closed almost at day's low, Pradeep.
Well, so these are some of the stocks, but look at the Nifty. You know, the index is all set to close at almost 10,800. But when the adjusted price comes in, maybe we'll be around 10,780 odd levels looking at the last half an hour of trade. But we are at day's high, and this is a new high that we have seen today. 93 points higher on Nifty. No, but actually, if you look at the day's low, look at this. In the first hour of trade, we hit the day's low at 10,665 odd levels. So 130 points of an up move that we have seen intraday today. Huge amount of short covering, and looks like, you know, a lot of fresh buying positions also coming in. But actually, the index that moved up today was Nifty Bank. So look at that, and specifically look at the Nifty PSU Bank Index. That tells you the real story. That is where the turnaround really came from. Look at the surge in Nifty Bank, and this is PSU Bank up 4.5%. So this is today's story. Actually, market completely turned around after that announcement came in from the DEA secretary that government is going to borrow 30,000 crore rupees less than what was estimated earlier. So this is where you know, the things completely changed. Let's look at some of the key contributors other than banking. Well, PSU banks have contributed a lot in terms of the price movement, but going by the weightage is ICICI Bank, the private sector bank, that continues to contribute. Even on Monday, ICICI and HDFC were key contributors, but today SBI has also contributed around 10 points. And IT was the other pocket that was supporting markets. Interestingly, Kotak Mahindra and HDFC were some of the private sector names that didn't quite support. So these are some of the pockets that have been helping. But let's look at the bigger picture. You know, in the morning, index was kind of struggling, and even the mid-cap and small-cap stocks. But in first 15-20 minutes of trade today, we hit the bottom in terms of index levels, and we also hit the bottom in terms of the worst possible market breadth. And thereon, things improved, ending the day with a marginally positive number. So mid-cap and small-cap participated in the rally, maybe with a time lag, but indeed they did. But if you look at the Nifty, well, this is the real change. In the morning, we had, you know, almost 70% of the screen in red. Now it is down to almost a fourth or so. What is really leading? Banking, as we mentioned, Axis, SBI, ICICI, and IT. Follows that, HPCL also benefited with some clarity coming in on the disinvestment. And what were the key losers? Well, Wipro corrected, ONGC is down, and also Kotak Mahindra Bank. So across sectors, there were a few key losers among heavyweights, but the sectoral trend was more clear on the buying side. So that's the picture coming in. But at the end of the day, what matters is a very sharp recovery, interesting reversal in markets, and definitely a lot of shorts got butchered in today's trade. That is what explains 130 points recovery in Nifty. Really, Kunal, what would be your position tomorrow morning that you'll be looking to take, or if you could tell us what position have you made before the market closed today on Nifty or Bank Nifty?
Well, I've got a continued long position, Pradeep, and I think that the overall structure of the market supports only one direction, which is that the markets are going up. And we've seen a big breakout on the Nifty. As you just very rightly mentioned, I think there's a lot of shorts in the system, weak hand shorts. which got built when the Supreme Court news came out last week. I think those shorts are still in the system, and they're now being flushed out. I think that this short covering alone can take the markets higher still. So 10,900 I think is also gettable. You might well see 11,000 before the budget. So I think one should continue to have long positions. The stop loss now should be in the region of 10,650 on the Nifty.
Okay, so a bullish view coming in there. But Amit, the template for this market doesn't change. It's been buy on dips all the time. What would your closing thoughts be today on the day when Sensex, Nifty and Bank Nifty, all of them have closed at record high levels?
We are in the melt up stage of the bull market, right? So we are very close to the intermediate top. It can be 300 points away, it can be 500 points away, I don't know. But we are very close to that because the quality of stocks which are rallying, this cannot last for a long time. So we are very close to the intermediate top, I think. And it probably will be very close, but that's where we are. See, there are two types of regret an investor will have. One, regret if he sells early and market, let's say the stock goes 10% higher. And the second regret is one where he loses a lot of money. It's okay to have the first kind of regret where you sell a little early and you leave something on the table, but the second type of regret will cost you a lot. So we are okay to be on some cash so that we are 85% invested still. So, but we are very close to the intermediate top. That is something which I'm very confident about.
All right, Amit as well as Kunal, thanks a lot for joining us today and taking us through your views on the markets. Well, it's time for us to slip into a short break. Don't go anywhere. We'll be back with more on the other side.
What do we want from our country today? From the economy, from the politicians, the policymakers? Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more. Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
welcome back. You're watching Countdown on Bloomberg Quint. Well, CRISIL came out with a report that states that the demand for hotels is growing, leading to a higher occupancy rate. In order to get a broader view on this and to understand the trends witnessed in the hotel industry, we are in conversation with the chairman and managing director of Lemon Tree Hotel Company. Patanjali Govind Jeswani is joining us for that, and Saloni Dhanuka, who tracks the space pretty closely, also joins in. Saloni, over to you.
Thanks for that, Navneet. So talking about hotel industry, sir, according to a CRISIL report, demand for hotel is growing at a higher pace than supply, thereby leading to higher occupancy rate and higher average revenue per room. So what are your thoughts on this?
Well, according to Harvard HTL, the All India occupancy in FY14 was about 58%. And in FY17, it had risen to 65%. And this was primarily because in those 3 years, the last 3 years, demand had risen at about 13.7% and supply had risen at only 8.4%. So going forward, typically when demand obviously outstrips supply, occupancies go up, and then there is a lag effect for pricing. You've got to keep in mind, in the last 7 to 8 years, the hotel sector has gone through a prolonged bottom of cycle with huge supply injections. And my estimate is that going forward now with demand picking up on a sustained basis, I expect that occupancies, when they firm up, will lead to a price hike. So in the next 2 to 3 years, I expect firming up of prices in India in the hotel sector, and occupancies moving north of 65%, obviously.
And what about Lemon Tree Hotels in per se, sir? Are you experiencing this change in dynamics? Can you share the trend in occupancy and ARR seen for Lemon Tree?
Okay, so see, Lemon Tree operates in the mid-priced or mid-market hotel sector. And what we've seen is in that part, which is really the very roughly the 2 to 4 star space. And we've had an average occupancy across India in FY17 of about 77%. And the mid-price sector and the Indian occupancy, all India aggregate occupancy, was about 65%. So we were happy to see we were doing an occupancy premium of nearly 1.2x on the industry average. And going forward, we have a very positive outlook on this part of the hotel sector. And price hikes, well, if I look at Q3 in FY18, which is this year, we managed to increase pricing across India by about 14% for same hotels versus Q3 in the previous year.
So, well, that was the management of Lemon Tree Hotels, quite confident and positive on the entire hotel industry outlook, and they believe that the 2 to 4 star hotel is in the sweet spot in the long run. So, back to you guys in the studio.
All right, Saloni, thanks a lot for bringing in that good conversation with the management of Lemon Tree. But since it's earnings season, let's talk about a company which came out with a strong December quarter. And we're talking about Sterlite Technologies, which posted a profit of almost 83% this time around. The company's also recorded the highest order book ever that sums up to 4,573 crore rupees. To help us decode the earnings in further details, joining us now on the phone line is the Chief Financial Officer of the company, Mr. Anupam Jindal. Mr. Jindal, good afternoon. Thanks a lot for joining us, and congratulations on good set of numbers this time around.
Yeah, thank you. Thanks a lot.
Mr. Jindal, looking at the numbers, it looks like the growth in the export market for you has been pretty good. Could you take us through the key highlights of the quarter?
Yeah, so driven by the global data consumption explosion, which is being seen, driven by the newer technologies like 5G coming in, and overall various measures happening in the world, the fiber continues to grow globally, and Sterlite, being one of the key players globally, is getting the direct benefit of that through its access in European market and various other export territory. So we have seen a sustained volume coming in from our plants in both fiber and fiber cable business. giving us better efficiency. And since we are also consciously putting in efforts to expand into newer territories as well as newer customers, we are able to expand our export footprint. And this quarter was the highest ever quarter in terms of export sales, crossing 500 crore from the quarterly sales perspective.
So what's the contribution of export to overall sales, and do you see it going up further if suppose you had to give a guidance here?
So in terms of absolute value, it was 500 crore, up by about 78% YOY from last year. And from revenue perspective, it was almost like 60% of quarterly revenue. So in absolute value, definitely we believe that on annual basis, the numbers will continue to increase because the larger growth is coming from outside India market. So as and when India market improves as a fiber industry, definitely we can look at some shift happening from global to India market. But I think for next few quarters, we will continue to see growth from export market.
There has been significant capex, from Indian companies as well, at least one or two, and government also has been emphasizing, a universal digitization kind of a campaign. Has it not really benefited the demand in domestic markets? Any particular impediments that you have seen?
Yeah, I think, the overall, from India perspective, there are two markets. One is public market where the government itself initiates fiber rollout through Bharat Net Program or some other enterprises spending money on that. And second is from private telecom operators perspective. So I think both of these had certain challenges in the past. We are looking at both private operators as well as the government initiatives to kick off at an aggressive approach. And then maybe that will result into a faster growth of Indian fiber market, maybe in coming quarters and coming year.
Mr. Jindal, I'm just going back to your numbers. The EBITDA margins have come in at about 24.2%, and you've said the growth has come in from the overseas market. Could you give us a breakup of the margins that you garner from the overseas market and from the domestic market? And will you be able to sustain the kind of margins that you've posted this time around?
Yeah, so this time the margins are coming far better than what we have typically reported in the past, like 21-22%. And we have maintained that our margins would broadly be in that range of 21-22%. We have always committed that our growth of EBITDA will continue in absolute value. The margin percentage depends on the mix between products and the services business and how we are operating in that. So the margins are not materially different between the domestic market and export market. So that will not have a major impact on the overall percentage, like 24-25% EBITDA margin, which we gave this quarter.
Okay, and talking about the order book, you've also reported that this is the highest ever order book reported by the company. But if I go by the order book mix, orders from services and software, that's remained constant. What is your outlook there, and do you see more orders coming from this space in the near future?
Yeah, we are very confident of increasing our order book from services business as well. Somehow the services business order book remains quite bumpy, and we might have one order coming up once in a while and increasing that order book. So we continue to work. We have a strong pipeline of bidding which we have done, and on private side also we continue to work with multiple operators.
Right. Mr. Jindal, sorry to interrupt you. We've got HUL numbers coming in, but all the best for the coming quarters. Thanks for joining us today.
Thank you.
Well, you've got the HUL numbers flashing there on your screen, which do look good. The net profit for the quarter has come in at about 1,330 crore, which I believe is above what the Bloomberg estimate was throwing about. That was 1,167 crore. Remember, there were a lot of tailwinds for the company this time around. On a low base, there was restocking after GST. All of that had to work in favor of the company. We'll just wait for the key metric which everyone waits for. Volume growth at 11% versus our estimate of 11%. I really don't remember when was the last time HUL reported a volume growth in double digits, Pradeep.
So that is on the base of a negative
minus 4%.
Minus 4% for last year. And therefore, one would remember that this was the base quarter that we are talking about here was the October, November, December 2016 quarter, when because of demonetization and then various other logistics issues that had come up because of that, the sales were down. And on that lower base, 11% growth, volume growth is what we had anticipated, what our research team was also expecting, and they are bang on target. But in terms of profitability, company has definitely surprised. So we'll have to wait and see if there are, some adjustments, some one-time entries that we have to discuss.
So the revenues, Pradeep, have been pretty much in line. So there is no beat on the revenues. I really want to check if there was an exceptional item, because usually HUL does report a higher other income or something. I remember in the corresponding quarter also there was an exceptional item of almost 150 crore. But let's get a better view on at least the headline numbers that we are getting as of now. We'll be joined by analyst Sameer Deshmukh, senior analyst of paints and FMCG at Reliance Securities, who's joining us right now. Hi Sameer, thanks a lot for joining us. What are you making of the key numbers that we've just got from HUL? A beat on the bottom line, but clearly the number to talk about is the volume growth of 11%.
Yeah, the volume growth is definitely ahead of our estimates. We were expecting around 8 to 9% volume growth, but volume growth has come in at around 11%. But more than volume growth, even if you look at the net profit, excluding the exceptional items, that has gone up by almost 30%. So that will definitely result in upgrading of the EPS estimates for the coming year as well. And but my sense is that volume growth of 11% will not be a steady state number to look forward in the coming quarters. It will be more in the range of high single digits, which we can expect from Unilever. But on the face of it, the numbers are quite phenomenal.
So if you kind of normalize the volume growth, for the extraordinary base effect, do you believe that there is a significant acceleration in volume pickup for December 17 quarter?
So if you look at the base quarter, there was a volume degrowth of minus 4%. So if you leave aside that impact also, the volumes have gone up by around 7 to 8%, which is on a normalized base, which is quite impressive considering that the average for the last few quarters has been around 4 to 5%. So there is definite acceleration which is happening, and especially after the GST trade pipeline correction has come into play, the momentum is expected to sustain.
Right. Sameer, if I look at the segmental performance, clearly personal care is the one which contributes the most to the bottom line for HUL. It's a degrowth for foods when it comes to the EBIT. Personal care 1007 versus 921, and home care 354 versus 234. What sort of numbers were you factoring in for especially home care and personal care this time around?
So home care, what has happened is that definitely the numbers are ahead of our estimates by around 10 to 12%. Home care, the most important thing has been that there has been on a year-on-year basis, prices of raw material have come down. So that is definite impact which we can see. Apart from benign input cost, we have also seen an effect of premiumization, which has benefited them in the home care segment. And with respect to personal care was the maximum hit during demonetization in the base quarter. So there again, the growth is good, but it is not as good as the home care segment.
Okay, and while you can see HUL management getting ready for a press conference, and we'll go across and listen to the management. Let's go across to the press conference.
And therefore, let me start by first setting the context. During the quarter, trade conditions are normalizing. In September, we had talked about an improvement as the quarter progressed. We're glad to report that from a December perspective, conditions have been much better shape. As you're aware, in November, GST rates were reduced for many of our categories. We are happy to share the transition has been smooth. From a demand point of view, we are seeing a gradual improvement across all our categories. Input costs, however, have continued to inflate and are primarily crude-led. In this context, let's talk about our growth performance. We have delivered a good quarter of strong volume-led growth. Our reported revenue growth was 2%. After adjusting for the accounting changes post-GST, our comparable domestic consumer growth was 17%, with 11% underlying volumes. It is pertinent to highlight that in our December quarter 16, our base comparator, was a weak one. We had flat growth, which was affected by demonetization. Our comparable EBITDA margins have expanded by 110 basis points. Now let me talk a little bit about our category performance. Home care delivered double-digit growth across all categories. In laundry, all our key brands grew in double digits. In household care, growth was led by Vim. Personal care was broad-based and across both personal products and personal wash. In personal wash, all our key brands grew. Dove and Pears led the category growth. In skincare was driven by a strong performance from Fair & Lovely. Growth in hair was enabled by key brands and again was volume-led. Color cosmetics has been a wonderful part of our business and has continued to deliver robust performance quarter on quarter, and we have repeated it again in December. We are happy to share with you that our Ayurvedic oil brand, hair oil brand, Indulekha, which received clinical validation of an Ayurvedic medicine in last quarter, has now entered the category of shampoos. The shampoo has a unique formulation which contains the goodness of 9 Bringraj plant extracts. Moving on, our foods witnessed robust growth led by ketchups, jams, and soups. Refreshment sustained robust delivery yet another quarter with strong growths in tea. So all in all, I think across our categories, we have seen broad-based and good growths. Now I would like to really talk about GST and some of its implications. You would recollect that effective November 15th, rates had been reduced for many of our categories from 28% to 18%. We welcome this move by the government as this rate reduction is beneficial for the consumers. As HUL, we remain fully committed to passing on the benefits of this rate reduction to the end consumers, and to this effect, we have taken series of actions. Let me call out a few to illustrate our commitment. We immediately advised our modern trade customers to pass on the benefits to consumers. We also sent a communication through our distributors to more than 1 million retailers, seeking them to pass on the benefits to the consumers. We have accelerated more than 800 networks to reduce prices or increase grammages in case of price point packs, and we are happy to share that most of them have now landed in the market. We have widely communicated the reduction of these prices in newspapers and in more than 10 languages. You will appreciate that there is a time lag between the GST rate reduction and the new packs being introduced in the market. Time is required to make changes to the artworks, to order packing materials, to produce and make the stocks available. Hence, it's not possible to immediately pass on the benefits of the 15 November rate reductions on some of our pipeline stocks to the consumers. So what are the actions we have taken in this? For the period between 15th November to 30th November, we estimated this benefit at 60 crores, and in early December, we offered to deposit it with the Consumer Protection Fund. So suo motu, we reached out to the authorities and offered to deposit 60 crores. For the month of December, again, because there was a delay in the pipeline stocks getting exhausted, this amount was again close to 59 crores. So again, in early January, we offered to deposit both November and December, amounting to 119 crores to the government. The authorities have actually commended the proactive approach taken by HUL. In the absence of any clear legal provisions to deal with the subject, they have forwarded a request to the DG Safeguards. And now we await their guidance in this matter. We have not recognized this 119 crores as a revenue, and we are holding it in our books as a liability to be passed on to the consumers or to the Consumer Protection Fund. Now let me switch gears and talk about our drivers of growth. Our drivers of growth continues relentless focus on innovation, impactful 360-degree activation, and sharper in-market execution. Then we really focus on sustained market development emerging categories such as fabric conditioners, green tea, and natural care. Our investment behind our brands was stepped up further to really deliver on our strategic brand objectives. Now let me talk about our financial shape and the P&L. Earnings before tax EBITDA margins grew by 24%, and our comparable margins improved by 110 basis points. Cost of goods sold was down on the strength of a strong and a robust savings program. Net profit before tax and after exceptional items stood at 1198 crores, which was up 30%. And net profit was up at 28% at 1,326 crores. Looking ahead, we expect the gradual improvement in demand to sustain and a further inflation to input costs. Our strategy will continue to remain agile in the face of uncertainty. We focus on volume-driven growth and improvement in operating margins, and we will focus on competitive, consistent, profitable, and responsible growth, and that really remains unchanged.
So how your volume growth will this continue in the following quarter, because 11% double-digit growth has come in after a while. So will we see this sustaining?
See, first is, you know it, we don't give guidance. Yeah, but before I get into answering the question, season's greetings to all of you and to our viewers. Coming back to the results, I think one has to understand that the comparator base was the demonetization quarter. So I don't want us to get very euphoric. The good bit is that as a business, we have continued to be very resilient, and whatever was lost in December quarter 16 has been more than recovered in December quarter 17.
But this volume growth was mainly because of Ayush and Indulekha?
No, it has been across. Let me just share with you. Yeah, our home care, the top line grew at 20%. Here I'm just talking about the 20%, comparable to the 17% growth.
Yeah.
Foods has grown at 18%. Personal care has grown at 17%. And a refreshment business, which did even well during the demonetization quarter, has delivered a very robust 13%. So the growth has been broad-based. Yeah. So we are very pleased with the way our entire business has performed in the last quarter.
So give us a sense on the kind of rural growth. We understand that last quarter you had said that rural growth was picking up, or it is not as robust as it was earlier. Give us a sense on how the market is progressing. Also, with regards to the wholesale channel, give us a sense on whether the channel has normalized as we speak.
See, first is very clearly, all the channels are on the process of getting normalized. Yeah, so that's the journey they are very clearly on, and we are also very happy that CSD, which went through a bit of turbulent period, is now slowly getting back into the normal rhythm. Yeah. As far as the consumer offtake is concerned, it is too early to determine a definitive trend taking place, but let me give you a bit of a history. If you recall, there was this golden period where the rural growth was growing at 1.5x, 1.7x the urban growth. Then from 2016 onwards, the rural growth had come down and it was more or less at par with the urban growth. Yeah. And if you look at the volume growth of the whole categories in which we operate, I'm not talking about now our volume growth, but for the industry as such, it was operating in the vicinity of 3-4% on an average for the last 3-4 years. Yeah. Now, the good bit is, against a minus 4% volume growth in the preceding quarter, in the preceding year, same quarter, we're now talking about 11%. So clearly we have gone back to the 3-4%, even if you take an average. Yeah. So that's a good sign. And, we are very heartened by the comments made by Mr. Jaitley very recently, that the focus is going to be on the rural areas, and he has very clearly articulated that India does need inclusive growth, and it's very important that the farm sector needs to grow. Now, that clearly gives us confidence that going forward, we should be seeing more improvement coming in from the rural sector. But I wouldn't like to sit down now and say that a clear trend has emerged. Let us wait for another quarter or two, and then the trend will become very obvious to everyone.
So as far as you spoke about the input costs which have increased in the first few months, will we be passing those on to the consumers as the year goes on? And also, sir, we are aware of this anti-profiteering notice. So how are we going to deal with it?
Certainly.
So let me talk about the commodity
my able CFO.
Yeah. So let me answer that first. Absolutely, I think our model for handling inflation has been a consistent one and one which works for us. We continue to aggressively drive our savings agenda. This year we've been clocking between 6 to 7%, and that's really our first port of call, and that will continue. Today it's embedded into the organization and it's an integrated program. Second is with the volume growth back and coming back robustly, we get the operating leverage. And that again is a big generator of fuel for growth. Absolutely, we have a product mix. When we continue to grow some of our premium portfolio, and they are growing well, again, that generates the source of funds for us. And then it really comes down to how do we manage that kitty? And then we look at what is the levels of inflation. It's absolutely right that crude, which was about 57 a quarter back, today it's looking at 70, and it's a bit volatile. And where required, and if required, after we have exhausted all our opportunities, there is a need for judicious pricing. We will take pricing, but without losing our market competitiveness. Keeping and gaining our market competitiveness will be paramount to us. So that will be our approach to how we will manage it. And let's see how it really pans out. I think the important piece is for us to be agile, responsive, and then we will play all levers. So that's, let's say, the first part relating to commodities and inflation.
Just to ask the question on that, how do you expect the trajectory of input costs going ahead? Do you expect it to remain volatile? Or?
So look, we've said that there is a trend of inflation coming through. It's come through from a crude point of view. We've also started to see some of our inorganics coming to pick up. Now, whether it will be volatile or whether it will be consistent is something that we need to watch. And it's anybody's guess today. But we absolutely remain vigilant. We continue to monitor all of this. We continue to monitor our portfolio. And we will respond accordingly.
Yeah, just to add to what Srini had said, I think important to note, and which you would have observed, that as a company, we have become very agile. And you would have seen it in the last several years. Yeah, whether it's a commodity prices going up or going down, whether it is demonetization or GST, I think we know how to play the different levers of the game. And very importantly, our planning cycles now are very short, and we can adapt to the changing circumstances very quickly.
So when you say that we will take price into consideration without losing competitiveness, do we expect the price increase?
See, first is, Srini never said that we will take the price increase. Yeah. There is no one-to-one correspondence between input cost and pricing. We always keep a focus on value to the consumers, the price-value equation. We first play all the levers of the P&L. That's what we've been doing in the past, and that's what we will be doing in the future.
So you've concentrated, for a very long time now, for the last 2 quarters, you've looked at premiumization as a strategy also, and you've launched a lot of products in the more premium range. Will this keep continuing, and what happens to your mass brand? Because that is where you're also losing market share.
First is, you're wrong in alluding to that we are losing market share.
So, but Nielsen data suggests that,
You just have to look at our growth rates and the Nielsen growth rates, and you'll get a perspective of how we have been growing our business. Yeah? So I think that is factually wrong. Now, as far as our focus is concerned, we don't play in one segment of the market. We have a portfolio play. So we are at the mass end, we are at the popular end, and we are at the premium end. Premiumization is one of the thrusts, and that will continue. But remember something, we will remain competitive in the mass and the popular segment. There's no question about that. Our strength lies in straddling the price-benefit pyramid.
Absolutely.
And that's the core strength of HUL. We have got a portfolio to play across price, across benefit pyramid.
Hi, sir. Rahul from Zee. This would be great if you can reply my answer in Hindi, because since this is a Hindi channel. Sir,
Sorry, before you go, you had a second question on GST. Yeah, let me have Srini address that. फिर आएंगे हम आपके question पर भी.
Yeah. So I think let me address it. As I said, it's important to understand this, because what we have done, we believe, is the right step and a very progressive step here. 50% of our portfolio was unaffected, but 50% of the portfolio was affected when the November 15th rates came down. And in many cases, the rates only came down from 28 to 18, which is absolutely the right step and a very progressive one from a consumer standpoint. we were very clear that all this rate reduction benefits had to be passed on. You would understand that this intimation came around the November 10th and it became effective November 15th. So we have pipeline stocks. It's important that when we start to manufacture, we need artworks, we need to get packing material, then we start to produce these new products. So obviously there is a transition period where we had continued to sell at the old MRP, but the tax rates were lower, which meant that we were accumulating money with us, which we would have ideally wanted to pass on, but it takes time. We did not want to run trade schemes because they may not necessarily reach the end consumer. Stickering of the products is, again, we don't believe it really works, especially on laminates and others where it can be ramped down, in which case, again, the consumers don't see the benefit.